Hello guys, in this lesson I'll be sharing with you how you can make your entry confirmation using the candlestick closure. And in this video we are looking at two particular pattern of candlestick closure. The candlestick closure we are looking at is the bullish engulfing candle, which is generally engulfing candle, and the hammer alongside the pin bar. Now, when we are looking for opportunity to buy, which is in a bullish market, we'll be using a bullish engulfing candle or a bullish pin bar and a hammer. This would be our entry confirmation. And this entry confirmation is going to be based solely on the closure of the candlestick pattern. What that implies is that you will always need to be patient enough for this particular candlestick formation to form, and you will only make a trading decision upon the closure of this particular candle. So I'll be showing you what time frame you will be doing this and how exactly you can go about all of this. So if you look at my chart, this is Euro NZD, and if you look at this, price has been bullish. For my previous indicator, we talked about how we can make our entry using the moving average 20 and that of moving average 25 and moving average 10, both exponential. So in this lesson, we'll be using a combination of that strategy alongside with this candlestick pattern in order for us to find our entry. But most importantly, every entry will be made after the closure of a candlestick formation. So we'll be doing this on 1 hour time frame. So first of all, we want to determine the trend. So on our 1 hour time frame, we want to see price. If we are to buy, we want to see price cross the middle Bollinger Band. So here, price crosses the middle Bollinger Band. And we say for us to validate a change of trend as far as middle Bollinger Band is concerned, we want to see price cross above the middle Bollinger Band and then price pull back to retest the middle Bollinger Band. And here, price crossed the middle Bollinger Band, it retested. So just as you can see, this is the crossing of the price, which happened here, and then it retests the middle Bollinger Band before continuing to the upside. So here we have that confirmation, price break it, price pull back to it, and price retest the middle Bollinger Band. So when price is retesting, you can simply pick up your trend line and mark out this zone, because the next we want to see price breaking out to the upside so that we can make our trading decision either to buy or to sell and be in this movement to the upside. So in order to make this clearer, you can see, so when price pull back to this moving average, what is our expectation? Our expectation now is for price to break out of this zone, because price has been bullish. In order for it to cross the moving average, we will need to see a bullish trend, which is a bullish movement. After that cross, a bearish reversal, a pullback happened, which brought price to retest it. So for us to buy, what do we want to see? So if this is happening, we put our trend line this way, we will now want to see a bullish signal. Now this bullish signal will always be represented in a candlestick formation, in a candle pattern. The question is, why a candle pattern? This is a visual market. It is a market where we don't see the participant physically, but we can relate, we can understand, and we can interpret their behavior based on candlestick pattern. Now, and the type of candlestick that was formed will determine the strength of who is in control of that market and of who is losing control of the market. And that is why the idea of this candlestick pattern is very important. So we're going to wait for a candlestick closure. So we have a bearish, which shows that sellers come in, and then suddenly we have this bullish engulfing candle. Now, how do we determine the strength of this bullish engulfing candle? If you look at this bullish engulfing candle, this particular bullish candle covers almost two of the previous bearish candle. So you can see that this candle closes two of this bearish candle. Look at it there. So all of these two candles were engulfed by this bullish candle, which shows that there is a more strength on the part of a buyer, a single 1 hour candle covering a previous two bearish candle. So which shows the strength of a buyer, and as such we now know and understand that there is a buying pressure. So after that engulfing candle closure, we now make our buy entry. Now, when it comes to candlestick closure like this, for you to make your entry, there are two ways you can make this entry. One, you can make this entry immediately after the closure of the candlestick pattern. This is a two-way scenario. That is one. Or you can wait for price to pull back to 50% of that particular candle before you make your entry. And this will actually give you a sniper entry as well. So look at what happened. You can see that immediately after the close of this, price opened and then it pulled back to almost a little bit more than 50% of that bullish candle before it now begin to pull up to the upside. So that is one way. Another way is immediately the candle close, you can make your entry directly after the closure of that candle. So your stop loss is below the middle Bollinger Band, and as you can see, that is how the price plays out. Then we'll have our commodity channel index in relative to the level of our relative strength index to determine our entry as well. So you can see that commodity channel index pull back to the level of 50. So most continuation, most reversal on a 1 hour time frame end around the level of 50 of our RSI. So commodity channel index crosses above the 50 level. So it crosses here, the bullish candle close, and that becomes our entry. So you can see how price is playing out from that zone. And here we have this particular pullback again. Now look at what happened at this zone. What do we have? At this zone, price came and then begins to retrace and it pulled back all the way into this particular moving average. Now look at this. After this particular candle formation, however, this candle formation did not engulf this particular candle. So you might be wondering now, how do I make my entry? Since this candle did not engulf this particular candle that pulled back into this closes above this moving average. And when that happened, a follow-up candle happened again, and it did not close below this previous candle. So since this doji candle did not cross above this previous candle, neither did it cover even up to 50%, you can make your entry and your stop loss will be below this moving average. And you can see that our CCI crosses from the level of 10 and 20, which is a confirmation to that effect. But however, if you were not convinced on making this trade, price went up and price pulled back into the moving average. And here you can confidently pick your trend line to cross it this way. And what do we see? Here we have a pin bar. Now, what this pin bar depicts is show us the strength on the part of the buyers. How did this trend validate? You will see that we have a bearish candle. Then after this bearish candle, sellers continue to pull price to the downside. And in their attempt to take price down, buyers came in, pushed price back to the upside, and closed it as a bullish pin bar. So if you look at the wick of this candle, which is the part of the rejection, this rejection is almost 2 times the body of this wick, which shows a strong signal of strength on the part of the buyer. So immediately of the closure of that candle, you take your buy entry. You be patient enough, your CCI crosses above this 50 zone, and that you have your entry there. And then here again we have another one, as you can see in this zone. So here you see that sellers came down, buyers came in, push the price back to the upside. So we have this rejection, which is showing the strength of buyers, but unfortunately this is not a pin bar, so we don't have an entry until price came back again, and there is this massive rejection of price that occur in this zone. And if you look at that carefully, you can see that after this massive rejection, this pin bar, price pulled back again and gave us another rejection. So you can see rejection, rejection, rejection. So each of these rejection is showing us the weakness of sellers as far as this price behavior is concerned. And if you look at that, you see that our CCI is crossing from the level of 10, and with all of this rejection, first, second, and third one. So here is our entry, and we'll be in this beautiful trade. So you can see how exactly this strategy plays out. It's easy for you to understand, and it is straightforward. So this is how it plays out, and this is how you can take advantage of this using your candlestick pattern to find your entry. Here we have our pin bar, and then we'll have the cross. A price closes above the moving averages after that candlestick closure. So these are things you need to focus. These are things you need to measure on. You can see this. You can see this. This is below the middle Bollinger Band, but these are working. So you look for an engulfing candlestick pattern. This is an engulfing candlestick pattern. The price closes above the CCI, closes above the level of 50, and you can see that particular bullish movement. So this is a good way for you to focus on, backtest this, and you can see how this works perfectly well. In the subsequent video, we'll be going detail and to look more to refresh our mind on how you can do this combination using a trend line formation. I believe you have learned something new. Do not forget to give this video a like, share, subscribe, turn on your notification bell so you'll be the first to get notified when we upload our next video. Okay, for the purpose of those who will ask the setting of this indicator, here is the setting. This is our Bollinger Band. The period is 130. We basically use this to determine our trend, and our commodity channel, moving average 25, and that of moving average 10. We use this to focus on determining our entry. So the behavior of candle around this zone. So here's our relative strength index. This is used for us to time our entry zone. So we want to see how the CCI behaves in this zone. And here is the CCI, which we basically use to determine our divergence. And also, whenever candle close, we look at the level of the CCI relative to our strength index.